popularity on the forum, and here we are on the 1 hour time frame. And remember, we during the course of last week trading session, we only took one opportunity here on the US oil, and that was this bearish move to the downside. And since then, we were not able to take opportunity of any move as price was caught in a consolidation phase throughout the course of last week. As we want to always look for opportunities that gives us long-term potential, and so because of this, we want to hold on to see how price is going to play out. And during the course of last week's trading session, we identified two key levels that will guide our actions going forward. And the first key level at 107 dollars. That's $107, which is right here. And what we agreed on last week was that we are waiting for price to break above that key level, do a retest of the structure, after which we look for patterns on lower time frame to join the trend continuation to the upside. However, during the later part of the New York session on Friday, we saw a significant breakout of that structure, but price came back below the structure again, and today we're seeing the same scenario. At least in the early hours of today, we were welcomed with two bullish engulfing candles that sent price right above that key level, and we had the retest of structure around this area, and we are looking out for patterns that will support a trend continuation to the upside. So going into the New York session, how are we intending to take advantage of this bullish move when it finally happens? So for us to have a clearer chart, a clear and simple chart, I want to delete this key level here at 105 as it is no longer needed at this point, and this selling opportunity, this sell position meter as well. And let's see what has been happening since the beginning of the week. Well, the beginning of the week, we have seen our price has been juxtaposing between this area, between 105, $105.50 and $107.50 area before we saw that breakout of that structure. Then we saw a retest into this area and another bullish engulfing candle. At least the last hour candle was not an engulfing candle, but it was a bullish candle. So now we are around this area, which is also around our bullish trend line that we identified on the daily time frame. Let's go to the daily time frame and see that bullish trend line one more time so that we can have a better perspective into what I'm talking about at this point. Excuse me. So the first thing we notice here is we have this bullish trend line here. Give me a moment. Okay. We have this bullish trend line here waiting for us. And I told you during the course of last week trading session that we want to be seeing a break above of this area. We want to see price right above that bullish trend line for us to take advantage of any move to the upside. And remember what I used to say about price action oscillating around a trend line, either a bullish or bearish trend line. That area is always a very, very sensitive area because we could have a breakdown of that area. That is, we could have a breakdown that price moves to the downside from this area, and there is a possibility that price could respect that trend line and push price further up. So because of these two scenarios that is very, very possible around a trend line, it is very, very pertinent that we look down onto lower time frame to look for better confirmations that would guide our actions going forward. So let's go back to a lower time frame. Let's say the 2 hours time frame, I guess for now. Let me go to the 2 hours time frame. Let's see what is happening at this point. Now, since the bearish move to the downside since the beginning of the month, we can see that price has been respecting that bearish trend line. We see price continue to find lower lows and lower high, lower low, and we had a consolidation phase mid-June before we saw that move to the downside, and it appears prices come back to respect that trend line one more time. Now, with this scenario we have here at this point, the first thing I want to be doing is to identify this demand zone. To recognize this demand zone, we can see that as soon as price tested $101.50, price continued to find higher highs, higher lows rather. And we have something that looks more like um, like a consolidation phase, like a rising wedge, which could send price going to the upside or going to the downside. So I want to identify this demand zone first. The first thing I want to be doing, identify this demand zone. This has been a demand zone in the past. So we label this area for the sake of clarity, and we have this area as our demand zone, and place it right in the middle. So we have the demand zone sitting around here. So we can see our price has respected that demand zone for quite a while before we saw, and hold on a second, I'm looking at something here. Um, I'm seeing a key level sitting at $106.50 here. That is between this area. I think $106 would be most appropriate at this point, between $106 and $106.50. Let's have, so we give this a label, key level at $106.50. We have $106.50 here, and I want to place this at the bottom, and let's place at the right hand side. So I want to be deleting this one, and I want to be using this key level to guide our actions as we head into the new week. Now, this is the scenario we have here, and let me extend this a little bit to the left hand side. Okay, so we can see what happened since price rejected that demand zone. We saw the first rejection of that key level on the 23rd of June. Price came back into the demand zone. Then we saw multiple rejection of this area before we saw price do another rejection of the $106.50, and then we saw a final breakout of structure during the New York session last week, and price came back to do a retest of the structure that's on earlier this morning, and we saw price trending to the upside from this area. So what I want to be looking out for is this. If they definitely, when we saw this breakout of structure here, that is the key level here at $106.50, the retest of structure, which gives us a reversal pattern, which is a signal and confirmation for a trend continuation, will have triggered an entry around this area. So if you are taking advantage of that move to the upside, kudos to you. However, if you haven't, then how do we take advantage of this move? So what I want to be doing here is this. We want to look out for ways through which you can take advantage of that bullish momentum if we had missed that first one here. So what are we going to be doing here? Let us identify another temporary key level around this area, as we want to be seeing a breakout of that area to join that rally to the upside. So we already have a breakout of this temporary key level here. I'm going to give this a purple to differentiate it from a major key level we are identifying for this week. So we have something at around $170.50 area. So now, at this point in time, it is appropriate that we can take advantage of a parent continuation to the upside right above that area, which I have identified at $107.84. You can see it with my purple dotted line. I can see around that area, so we can take advantage of a move to the upside from this area, then with our stop loss right below previous structure, and that is right above that key level we just identified at $106.50. So we have a scenario that looks like this. And one thing I want to be advising here at this point is that we should enter with a small position, probably half of your normal position size on your trade. And the reason why I'm saying that is because we need to be wary of this bearish trend line that we've identified here that has been respected since the beginning of the month, as we want to be looking forward to the breakout of that trend line. That is, we see a breakout of the structure, price could come into $110.50, which has been a major level for supplication area. And if we see a retest, that is, price comes back to do a retest of that bullish trend, of that bearish trend line, and that neckline, that key level we identify at $107.50, then we want to be looking out for patterns on lower time frame to join the rally to the upside. And if this happens, then you can now add your normal position size, add another position to this trade with your normal position size. So going into the new week, we have a bullish expectation here on the US oil. And in addition to these two parameters I've identified here, we want to see that after price tested the demand zone here at $102 area, we saw that price continue to find higher lows. And if we connect the series of higher lows together, definitely we could get a bullish trend line. So if we bring out our line chart at this point and connect the series of lower lows from this point in time, we'll be having something like this. And this also will be added to our parameters that will guide our actions going into the new week. So now we have a bullish trend line here, and we can see our price has been respecting that bullish trend line, and we want to continue to see that continue to happen throughout the week. Now, you know, as we always find the possibilities of the other scenario, that is a selling opportunity could actually happen, as we all understand that if price is sitting around our trend line, it's always a very sensitive area that we need to take more cognizance into. So there is a possibility that price will respect, as it has broken down that very bullish trend line here. We saw a breakdown during the course of last week trading session, and this could be a retest of that bullish trend line to send price crashing to the downside. So what do we want to see if we are going to sell this pair? So what I want to be looking out for is a breakdown of this key level at $106.50, which also shares a confluence with that bullish trend line we just identified. And we want to see price break down that area like this. We could have something like this, and the retest of three parameters here. First one is the bullish trend line, the bearish trend line, which is the black line we can see, and the key level around this area, where we look out for patterns on lower time frame that supports a trend continuation to the downside. And so if this one happens, so this is what we want to be doing. If this one happens, that we see a breakdown of that key level, which also shares a confluence with the bullish and bearish trend line. We can see here, let me move it close. It has a confluence, and we will be seeing a selling opportunity right, hold on a second, right above this area. And if that happens, then we want to be having our entry point right below, hold on a second, right below this key level. That is after the confirmation has been identified on the lower time frame. We want to be having a selling opportunity right below the structure. Then we have our entry point right at $105.90. Remember, this is subject to change, as we want to be seeing our confirmation patterns before we join around this area. So our stop loss should be right above that key level, probably around $106.7 area, which dovetails to about 80 pips. This is also subject to change as it depends on our entry point that will determine where our stop loss or our entry point is going to be. So where will our take profit target be from this point in time? Definitely, if we look left, we can see that we have an impulse leg here, and price does a retracement of the impulse leg, and we could have a trend continuation to the downside. So what do we want to do here? We want to extend this impulse leg into the future, and the only way we can do that with precise information and precise data is to use our Fibonacci extension tool and run it through that impulse leg just like this, and go back to where we started from, and we should be aiming at a 127.2% of the previous impulse leg, which will fall around this area. So $99 appears to be most appropriate at this point, so let me just give that, and which dovetails to about over 650 pips to catch on that one. However, before this can also be considered, it is pertinent that we don't ignore the structure around this demand zone, as this level here appears to have held price supported in the past. And if we are doing a selling momentum, definitely we want our first take profit target to fall around the $103 area, after which if we see a breakdown of this area, retest to structure, then we could add positions to join the decline to the downside. So this is the scenario we have here on the US oil. Like I already explained earlier, we have a very strong key level at $106.50 that is going to guide our action during this week, and we want to be seeing price right above that key level to buy the US oil. And if we see price below that key level, definitely we want to be selling the US oil. So we have this first parameter at the key level here. We have the bullish trend line, we have the bearish trend line, and we have the major bullish trend line that we identified on the daily time frame. So these are the three parameters that's going to guide our actions going into the new week. So this is what I'm looking out for on the US oil. I think my explanation was clear enough, as I want to be giving, let's say, 10 seconds to see if there are any questions that needs further clarifications regarding all what I've said so far. If you do have something that still appears ambiguous to you, you can drop a comment in the section and I'm willing to answer your question.